Well, the way we see it, Asia ex-Japan as a region does offer almost the best of both worlds in terms of investment opportunities. Number one, as everyone knows, Asia ex-Japan offers the best-in-class companies in areas such as technology, information technology, communication, and so on and so forth. In that sense, these Asian companies are, as I said, are best in class, and they are directly leading the advancement of certain sectors on a global scale. On the other hand, some of the Asian companies, some of the Asian sectors still enjoy what we call the demographics dividends, as evidenced in other emerging markets, such as the hugely but yet under-tapped consumption market across Asia. So from a long-term investor's point of view, Asia ex-Japan is never boring. It's always full of opportunities for long-term investors. I think over, say, the past 10 years or so, let's say since the end of the global financial crisis in 2008, i.e. when the whole world, especially Asia ex-Japan region as a whole, started to recover from the GFC, all these drivers that we mentioned are actually being well appreciated and reflected in the stock market. For example, since the end of 2008 and up to yesterday, Asia ex-Japan in general would have given you more than or closer to 300% return in US dollar terms, presumably led by major markets like Taiwan and even some of the lesser known smaller ASEAN markets such as Thailand, driven by the consumption space and financial space. Thailand itself has given you almost 300% return in the same period. And the way we see it, these long-term growth drivers remain very solidly in place. So we are long-term positive towards the Asia ex-Japan opportunity set. Well, I guess in the near term, surely there are some uncertainties in the market, namely what's going to happen in the US and global monetary policies, what we call the taper tantrum. Our view is that even when the US Fed is going to quote unquote taper, it's going to be well flagged and moderate, and therefore the impact on Asia as a whole should be very moderate. And again, another sort of short-term concern is the pace of vaccination and economic reopening across the region. This is where things get to be interesting. If you take that look at markets or economies like India, presumably the COVID situation is quite serious. Vaccination is still in progress, but lo and behold, India has been the best performing market on a year-to-date basis, and actually probably is the best performing market in the whole region since the outbreak of the COVID some 18 months ago. So I guess investors' perception is one thing, what's happening on the street is another. Clearly, in the case of India, investors is taking the bets that when things improve, when, let's say, infrastructure program gets started and corporate restructuring continues, and things will start to look up, and share prices are reflecting that already. So COVID definitely is something that we need to monitor, but in terms of opportunity set, we dare say investors are being very reasonable and very rational. And of course, there have been a lot of discussions surrounding the latest, what we call the regulatory reset in China. Our view is that over the long term, capital market reforms and corporate restructuring will continue in mainland China, and in the long run, given the long-term potential of the consumption market and also the technology advancement that is happening in mainland China, China will continue to be the key market in our portfolio. Well, as a bottom-up manager, the team at Value Partners are always on the constant lookout for the best businesses managed by the best managers that are hugely underappreciated by the stock market. And well, it's easier said than done, especially when investing in Asia ex-Japan. It's a big region, dealing with multiple fiscal policies, monetary policies, consumption behavior, and political frameworks. So we need to involve local specialization. And for example, the Value Partners team, altogether, we have some 70 plus investment professionals located mostly in Hong Kong, but also in mainland China, Singapore, and Malaysia. So we need to involve local specialists with a consistent investment process and framework, with really deep dive understanding of corporate behavior. And at the end of the day, we are in a people business, so we need to understand the corporate managers, their interaction with shareholders, and how to create values together. And more specifically, on the company level, first thing first, we would like to see companies that are showing consistent and superior business growth. And for example, another thing that we're looking at would be increasing incremental return on investment, just to make sure that every move they make, they will be creating additional value for the shareholders. And corporate governance is clearly always very big for Value Partners all the time. How they reward minority shareholders, how they interact and cooperate with minority shareholders to create value together, as I said. And lately, especially with more and more focus on ESG. So in normal business behavior, how they treat the environment, how they interact with their respective economies and societies, how they create sustainable business environment and livable environment for different stakeholders is increasingly becoming a more and more important factor that when we make the decision whether or not to invest in that company. Well, given the fact that Asia ex-Japan is a broad and diversified region, we at Value Partners believe that a better approach to generate risk-adjusted returns for shareholders is actually to have a flexible and actively managed strategies towards the whole region. In other words, in specific, the Asia ex-Japan fund that we are managing here is what we call a all market, all cap, and all style strategy. We tend to produce returns not by betting across markets, but really focusing on the underlying corporate fundamentals. We don't trade markets, but we pick good stocks, and we think that's over time will be the most appropriate approach for investors. Against the choppy market environment on a year-to-date basis, our fund, Asia ex-Japan Equity Fund, managed to outperform the underlying benchmark index by some 300 basis points. And from a longer term, from an inception basis, which was exactly 3 years ago, the underlying Asia ex-Japan benchmark index has returned some 34% in US dollar terms, and our fund has produced more than 62% under the same period. If you look at the composition of the portfolio as of today, as I said, we don't really trade or bet one market against the other. So if you look at it from a country allocation point of view, we will appear to be fairly country neutral, with a small preference for Hong Kong and China and North Asia on a broader scale. More importantly, if you look at it from a sector allocation point of view, we have always been overweight where we think Asian companies are good at, namely technology, consumption, and industrial manufacturing. And incidentally, these are the three areas that have consistently produced better alpha, better return for our investors on a year-to-date as well as a since conception basis. To give you all a bit more color of what we call the more helpful contributors to the portfolio. For example, one of the most consistent contributor has been a very boring, actually quite almost like a household name in Hong Kong industrial company. And another one would be at that time when we first picked up the stock, it was a very undercover, lesser known e-commerce consumption company in the ASEAN region. And since we bought it, the share price has appreciated a lot, and also with more coverage by the sell side, it is now becoming almost like a household name in that part of the universe. Another thing that has helped our performance apparently has been our early and big conviction position in some of the Asia consumer companies very early on. Another feature that has helped this Asia fund and other value partners funds to continue outperform the benchmark indices must have been our actively management approach. In specific, if you look at this Asia ex-Japan equity fund, all the time we will have high conviction exposure in non-benchmark stocks. Typically 10 to 15% of our fund's exposure right in the Asia ex-Japan space is in non-benchmark stock positions, to show that we navigate across the market and we don't need to be restricted by the benchmark, and we don't hug the benchmark. And also even within the benchmark oriented position, typical what we call the active share would be around 70 to 75%. So this clearly illustrates our decisions are always being backed up by our bottom-up fundamental analysis rather than benchmark restrictions. Looking forward, we think we'll continue to stay overweight in a couple of the key sectors in Asia ex-Japan region as a whole, namely technology, especially technology hardware, and also the big consumption sector. Interestingly enough, in other areas, we are seeing more opportunities coming up. One would be the industrials or manufacturing space, with hopefully sooner rather than later, with the overcome of the COVID, economic opening on a global scale must provide a lot of opportunities for industrial companies in Asia. And also with the continuous reconfiguration of global supply chain, which is actually happening already before COVID, some of the emerging Asian industrial companies will feature more importantly in global investors' portfolios. And we are actually seeing a lot of that coming up, especially with the recent share price correction.